waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions, phone or silent mode, deciphering the market, cracking the code, precision entry, the setup is clean, living the life inside the machine.
Patterns forming, packets called, balance base slow down, standing strong through it all. Risk defined, profit inside, Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. Yeah, the crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no chains. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call, balance base drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and the impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flag.
Good morning, everybody, and welcome. How was everybody's weekends? What an incredible start to the week. What a great end to last week. So I wanted to cover DAX. So once we see and get into things, I'll go over DAX primarily in first because let's face it, DAX was the outright performer on the week. Absolute star performer. Smashed through 25,000 pretty much for the first time ever. The record obviously was 25,260. It outperformed global peers. Wow. Now why? Let's have a good conversation on this. Why did the DAX? What constituents in the DAX actually made the DAX outperform all of its peers? What sectors? Industrial and defense. Good morning. Good morning. Weekend was really good. Weekend was very good indeed. I was out all day Saturday with family. Huge walk and very, very relaxing, but just getting outside. And then similar stuff, the standard routine, training at the gym, reading, studying, spending time with family, baking, cooking, all of that sort of stuff. Sunday, very similar day. Friends came over, did some work, trained, cooked. All right, so it's Monday. Most people are still in bed. They won't check the markets until later. US session, of course, is not until a good few hours away. But on a recap of last week, when we look at overall markets and heat maps, we had a good week. It was pretty much an everything rally. Crypto rallied, indices, precious metals. So we saw gold trade obviously higher, which we'll cover during the session. I'm just trying to find, just to give you some more color rather than you just sharing and seeing the DAX immediately. This is not updated. So Tuesday, very big day on the US side. Wednesday will be interesting. GDP on the UK. Forecast flat growth month on month. Wow, the UK continues to get better. Good morning, Chisholm. All right, so let's quickly talk macros and geopolitics before we get into the charts. Yeah, me too, Vinny. Welcome to Seacrest Markets. I think it said welcome to the firm. This is not a firm. All right, so US military intervention, as we all know, in Venezuela. They captured Maduro. Now, the markets treated this as a regime change rally. So we had investors staying long gold, but they also bet bullish and started to get really bullish in stocks, as well as the oil industry, because they saw stabilization. Now, thinking outside the box. Now, one of my best stocks that a friend of mine, David, believes will be one of the best performing stocks over the next 5 years, at least, is Caterpillar. So ticker is dollar symbol, dollar, cat. So the reason I'm going to bring that up, now it's not necessarily a day trading perspective. I appreciate this is a London session, day trading show, all of that jazz. However, we always look at the entire picture. But talking about Venezuela, talking about the recent geopolitics, talking about the entire global peers and what's going to happen since the potential infrastructure oil industry kind of imposing situation that we're seeing, is there's a huge opportunity now, or will potentially be a huge opportunity out in Venezuela for redevelopment, rebuilding of infrastructure. So what companies, now think about it from this perspective, what companies do you believe will benefit from regeneration, and development of infrastructure. One of the companies that is most exposed. There's going to be lots. That's what you need to think. Where do you see growth going in certain stocks during the period of regeneration and rebuild infrastructure of Venezuela? One of those will be Caterpillar, because realistically, they are the picks and the shovels that are behind the infrastructure or gold rush. So keep an eye on that. I think over the next 5-10 years, if there is huge opportunity in infrastructure, you've got to look at companies that will benefit from it. So let's talk Friday. Friday was long-awaited non-farm payrolls. Non-farm payrolls came in at 50K. So they were lower than the expected, which was the range of 66. I'm looking at the 66 to 70K range. But what we did see is unemployment rate. The unemployment rate ticked down to 4.4%. So that's good, because what it is it's slow enough to keep the Fed dovish while strong enough to avoid a recession. So maybe a soft landing, but it's not going to be an outright recession at this moment in time. What are we looking at? So at the moment, we're looking at DAX. We're just covering economics, geopolitics. We just covered geos. We've just covered some basic economics. But at the moment, we were looking at the DAX. Now, again, very, very quickly, the reason I've got the DAX on the screen is because last week, it was the star performer. Over 25,000 on the ticker, as you can see. It reached over 25 and a quarter, and it outperformed pretty much every other index in the industry. So the FTSE, yeah, okay, the FTSE did good. The S&P did great. The Dow did great. But let's look at it. The FTSE was, let's just pull it up. The FTSE 100, why have I done that? Wow. The FTSE 100 held that 10,000 level. Why was it boosted? I don't care what data feed we're looking at the moment. So it held the 10,000 level, boosted by multinational energy and mining stocks. Multinational, not national. So not UK companies, multinational companies, companies that have got worldwide exposure out in the US, out in Europe, and so on and so forth. So I always talk about the catalyst of the FTSE 100. US markets, which was the Dow. Am I still on it? No, I'm not. So the Dow, no, why did I click on that ticker? Sorry. Let's just go to the CFD. So the Dow hit 49,000, which significant level, really significant level. Interesting to see where we play out this week, because we had that huge expansion to the downside, and then of course we traded up to the highs. We failed to take out that high at 49,600, which potentially suggests that either this is a lower high structure is going to continue to trade to the downside. Alternatively, if demand is still in control, then this high is weak. So of course we'll see 49,600 taken in due course. Now, of course, bearing in mind that's the 5 minutes, so we don't want to be looking on that so early. So after we took out that high on 49,000, realistically, this looks like we're going to come back and get tested. So 48.5, 48 3/4 will potentially be tested, but let's see where the market develops. And the S&P, so the S&P was 7,000. I don't need to go there really, but let's just go here. Targeted 7,000, which was a key level that we was all targeting. As you can see, 6983 spot quarter was pretty much on the money for the week. We had longs all the way into that session. You might be able to see it if we go down, actually. Wrong ticker. So if we go down here and come into this ticker, we'll go down into the 5 minute. We'll get some color So we had longs throughout the week. Some of them have actually been removed. But we had the long on the Wednesday. We had the long on the Monday. And then Wednesday, Thursday in the S&P was pretty corrective, pretty flat. And of course, we had the empty moves on Friday. So that rally on Friday which we covered. So we covered it on Friday. And the idea was to wait for the markets to correct, wait for NFP to show its hand, and then trade on the back of it. But you could see that, sorry, my nose is really itchy. Oh, we could see we had that expansive move to the upside all the way through. And then trading into the close of play, we had that really corrective move. I didn't get anything on Friday. Did anyone take any longs? Good afternoon, Art. There were some great trades last week. Let me know in the chat what your best trade was last week and your worst trade, actually. Your best and your worst trade. You don't have to share both, but we like to see full transparency and we like to be able to discuss the wins and the losses, the highs and the lows. So Bitcoin, I won't transfer over and actually show you the data for this week on Bitcoin, but we can go into Bitcoin and actually look at prices. So initially we were looking at that kind of 94,000 target. Obviously we never got there, as you know. Let me come back out into the daily to show you. We had the 94,000 target, obviously, as an early week target, which we played into. We traded back down, and we did discuss longs on Friday. Now, we discussed longs on the proviso of a support level holding. We need to, of course, see that market trade into it, but we're trading in this kind of bullish range, this bullish, very corrective range. You know, look, so overall market's trading from that support level. Huge move to the downside, higher high, equal lows, and we're trading in this extreme. So if you really want to run some form of trend line or equidistant channel, we've got that kind of level trading through there. So Bitcoin, realistically, that is going to be holding that 90,000 to 94,000 range. For me at this moment in time, what I want to see is how price kind of trades out from here. So at the moment we're trading from these highs, 94,000. So there's going to be a lot of available volume sitting up at this level. Do we trade back into 98,000, 100,000 this week? I mean, if we're creating higher lows and we're creating those wick higher highs, then there is that opportunity to do so. However, the way this kind of PA is looking, it does look like we want to be selling at around 94,000 into these levels if we're looking at short-term intraday plays. But of course, we'll do it down on the lower time frame if the spreads are available to us. But overall, where's the sentiment? The sentiment is US Bitcoin Strategic Reserve is potentially going to be providing a fundamental floor. We did see ETF flows midweek, which created volatility. Now, overall, the week did end risk on with bid liquidity conditions improved across the entire market. And we're seeing it at the moment. And Bitcoin's acting as almost a risk proxy. So we're definitely seeing Bitcoin become more of a traditional risk play rather than it being just a paradise for volatility and gambling. Nice. I know you don't trade like us, Saucy, but I'm sure you remember the analysis on Friday with the looking to get long, or the idea of buyers coming in from support. On the lower time frame, I don't know if I saw a long because obviously I wasn't looking at it. I'm struggling to speak this morning. It's quite tired. So if we come into this, which was the Thursday's Friday level, so we were discussing this on Friday. This would be realistically the first area that I'd want to see fail, which we definitely had an attempt of failure. So price attempted, failed, come back in. That was a huge move off of that level, which was about, what was that? So that's actually 3-4 o'clock our time, so UK time. So US markets were obviously bullish by that point because non-farm payrolls were released. So if you were looking for longs, then you had them. Coming into the end of the day, realistically, all we can see is lower highs being printed and higher lows until we get that breakout. So look, we had that. We had that. They're just technical confluences to show you on the chart the color, not necessarily, excuse me, something that you want to trade from. If you believe there was a fade coming in, then yeah, maybe you could have got short, right? There's no doubts. So what level did you trade in from, Saucy, on BTC? And then did you take any profit? Can everyone see the screen better today as well? So I increased the display percentage, which it looks horrible on my screens, but I'm hoping it looks better to all of you. GJ, yeah, definitely. I can cover GJ, no worries. Wicked. Is it a good size, Kings? 90 spot 3-5 level online charts. I'm already at. Yeah, nice. Okay. 93.35. Okay, so you got in somewhere either around here or you took that move on the expansion, on the lines. Yeah, nice. Can it be increased? It probably can. Give me a second. Well, it probably can. I know it can. Give me a second. Is that better? I've just increased it by another 25%. I mean, I'm running this on a 32-inch monitor at 38.4 and 2160 res with a 225 scale increase. It's massive on this side of the screen. I feel like I'm magnetized. It's horrible for me. It's not very nice. I mean, it throws me off massively. So can you see when you use the line charts how it cleans up? Because price would not have come into that extreme. You can see, look, we've wicked into it. Very nice long though, Saucy. I think it's a good long. You know, well done. You took profits on it. You followed your plan. You followed your rules. You executed. Done. So let's take a look at sterling yen very quickly, because I know that if I don't, it'll be 10-2 and I won't have covered it. Let's just randomly grab one. CMC. Let's do CMC. All right, so risk bullish. Can't deny that. So, wow, that move was clean. This move here was very clean. Very clean. I know it's ages ago. I'm just marking it up because I don't trade GJ. Or should I say, I don't actively trade it. There's nothing I won't trade, but I don't actively trade it. I'm far too busy to keep trading certain instruments now. So we had that huge move to the upside. This will just give us an idea of where overall price is trading to from. And then we can kind of see what's going on. So this is this is where it gets a little bit interesting, because if you look here, right, we've had a failure and break of this high. My microphone wire is in the way. We've respected this low and created higher lows, right? So you can see that. I'm zooming in to make it even easier because I know you lot can't see it. So we've had a higher low printed here, which has taken out this high. And we're now starting to break these levels, right? So we're breaking these levels. So we have an idea of, are we going to come down and revisit 209s? Or will that 210.5, 211 range be okay? Now this is on the daily. So overall, continuing to be long. I'm not going to add. If I was long, I wouldn't be adding up here. I'd be waiting for market to come back down. I'd want to see some form of fairer pricing, fairer balance. There is a flip level inside here. This is obviously this last supply area of resistance. This was the last demand support area. But this is realistically going to be used to come down to lower prices. Mainly indices now, Jedi. It purely is a lot easier for me to focus on a few instruments during specific sessions. So primarily I'll be focusing on, for example, UK session, European session, it'll be the DAX. Later on, it'll be the US session. So you'll be looking at primarily the US 500 via the ES or via NQ. Where I work for Seacrest, a lot of the time, I don't have the ability to trade how I'd like to trade anymore. But I do still trade, obviously. So coming down into the 4 hour, again, just recapping what I just mentioned, trading back into the 60. I mean, the 60 starts to give us a bit more color, right? We know we're seeing a sentiment rotation out of risk, out of safe havens into risk. So we're still seeing gold, or we did see gold rally last week, but safe havens like the dollar, the yen, the Swiss, we're going to see them kind of trade lower. So the expansion to the upside is in sterling, is in euro, is in Aussie, as well, of course, as stocks and as well as Bitcoin. This just, to me, looks, we've got to move into either two positions, a corrective position or a retracement. So that's pretty much where I'm seeing this at the moment, right? So you look at everything. We have ebbs and flows. So we've got deeper pullbacks in certain areas. We start to get shallower pullbacks when trends start to run out, right? But for me, right now, you know, last high, there was no major interaction. Price just absolutely blasted through that. We traded, continued, but we've now got this very, very corrective PA. So we have to range out, or we have to pull back to get into an area of discount for us to get long. So this range is respected. This high failed to take this low. So overall, why is supply holding if demand's in control? Demand obviously got retraced it into, then we traded above that, take out this high. So there is some arguments for coming back into 211.80s, 211.60s. Now, when we're in here, we want to see how price reacts, right? We're not just going to take a trade off of the back of that unless you're looking at longer term positioning. But I think when you think about where gold is, we'll talk about gold in a minute. If you've got more time, Jedi, definitely look at FX, but you have to remember that FX is a mean reverting asset. So we'll always see that FX reverts to the mean of the pair. The best times to look at specific FX trades are when we've got interest rate differentials. So, for example, if the Fed doesn't cut, but the euro cuts, if the Bank of England cuts, but the Fed doesn't cut, if the ECB and the BOE don't cut, but the Fed continues to cut, then we're going to start seeing interest rate yield differentials. Now that creates opportunity. They're the best times to trade on an FX instrument. Intraday, there's still opportunities because you're trading legs, but you'll notice, again, from a period or seasonality perspective, or when there's minimal volatility, that the market won't range. So you either need to understand how, they won't trend. So you either need to understand how to trade ranges, and you need to be very aware that your risk reward will take a beating, or you just add other instruments into it to complement it. Listen, it's not a problem. It doesn't matter how you trade. It doesn't matter what instruments you trade either. There's opportunity in FX. But if you're looking at trading only at certain times, or you've got a career, or you've got a job, or certain things don't allow you to trade because of the way you've got to do things, then you have to look at, okay, where gives me the best opportunity on a weekly basis or a monthly basis to still trade, to still take enough potential opportunity out of the market without spending all day at the screen. Well, I've had breakfast already, but I'm starving. I'm absolutely starving. I think maybe that's why I'm struggling to speak. So sterling yen, very corrective up here. We're either going to correct into something inside this level, or we're going to trade through it. But for me at the moment, I need to see a correction on it. We've extended above that high at 212s and 15s and 212 and 15. So I'd expect to pull back to rebase. Now, where we find value is, realistically going to be somewhere under 212s, whether that's 211s, whether that's 210s. You guys have breakfast? Yeah, all the time. I have to. And then I'll have a snack soon. Let's go actually into mine. One sec. So gold for me up at these levels. I mean, we're uncharted territories. So anything can happen. Right now, just the way price is, you'd want to see a pullback. You'd want to see a pullback from these highs. Just there's no real way to trade this unless you're looking down on the lower time frame. Longer term, obviously, there's opportunities in there, but you can just see. So we've had that huge expansion to the upside. We've traded back down. We've created a lower high. We've created a higher low. We've started to try to create a higher high just by wicking that above. We've created a higher low. We've then created a higher high. So we're still bullish, but it's within that range. So it is very much a form of accumulation. So I'd be waiting to see some direction on that accumulation. Do you think EU shorts are reasonable? I mean, I don't think they're unreasonable. Let's have a look. I'll have a look in a minute, actually. Let me talk about gold quickly. So, yeah, huge expansion to the upside. We're now creating some form of accumulation range. So that is where, for me, I'd want to see some direction. So if I'm trading this range, this is where I'll be shorting from. If I was shorting, but I'm not shorting, because why would you short at this moment in time? If you want to be a hero, yeah, fine. But overall, we're looking at bullish expansions, trading higher highs, higher lows. We're still in a bullish range. There's no signs of bears at all, right? There's no structure that's taken. We'd want to see a break of structural lows. We then want to see some form of resistance respected. We'd want to see huge sell orders come in. We'd want to see the market get taken lower, and then we'd want to start looking for shorts. I don't mind missing the first quarter of a move or the last quarter of a move. Never has it bothered me to get in first or be out last. I look at primarily taking the middle section of a move and trading that. So anything inside this is where I'll trade. There have been opportunities in times in the past where I've been in very close to the bottom and very close to the top, and they have paid off, but they're stressful. So if you're looking at compounding all of the knowledge and experience over the decades of experience that you've got, and you look at the most opportunistic, probabilistic times, you just start to remove certain things. And up here, there are hero moves to be made. There are potential great opportunities. But until we see sellers really step into the market, for me right now, it's profit taking, potential shorts being built up. But that's taking into consideration where we are. We're just overextended in this leg. And I mean overextended in the fact that we're looking just for a pullback. Doesn't necessarily mean that price is going to crash. But it does mean be careful. Excuse me. Again, sorry. I should put my hand over my mouth. I apologize. If we just go down into the M5, we get, again, further color. We can see no major structure was broken to the left. We had some significant volume nodes building. So it just suggests that there's a lot of volume coming in, but it's fairly balanced. So if we look at what was the last structural low here, this. What's the major structural high? Again, still this. We're trading inside it. This high created this supply, but this supply failed to break this low, as you can see, right? Which means this high is weak. So demand's in control already. So demand's then taken out supply. So demand is still in control. The last point of demand that took out this high was this doji. So we could have looked for longs inside this on the M5. We'd be targeting this high because it's the natural flow. This high got broken with this wick, which if demand's in control, we're still holding. This high got taken. But if you look, the overall expansive legs of the bullish moves are very, very shallow. They're very, very corrective, which, as you know, we're in that range because we've had such huge moves to the upside. This is where we're now focusing. And we're very corrective. You know, we're still bullish. We took out that high. We failed to take out that low. So potentially this high is going to go when the US market opens or when bigger volume steps in. But it's undecided. So you're now looking to get long for what? Not much risk reward. If you're looking at taking out that 4,600 high, then that's fine. But you need to be prepared and nimble enough that if that doesn't happen, it's going to roll over and we're going to start seeing lower prices in gold. So that's pretty much where I'm at. So we've had those huge moves, and last week was fantastic. You saw us cover it and break it down on every session. You know what? I'll go into my tab rather than look for another cross. Give me a sec. So now it's just about being patient, waiting for the market to actually show its hands, and then we can trade off of the back of it. And I think that will be the beginning of this week for pretty much most instruments. And you can see it in euro dollar as well, right? So just on the M5, and I'll go bottoms up, and then I'll come back into top down. So that was the last structural level of the high that got broken. This is the last point of demand that broke that. We've respected it. We haven't failed yet, but at the moment, until this high goes, we've got that area of resistance support there, area of supply, meant to say supply, not support. We've got that area of resistance and supply that's holding in this range. And we had that huge expansion move from last week with the bulls coming in because it was a risk market. But now we're just trading sideways. So would I want to be short? No. Would I want to be long? I'd want to be long more than I'd want to be short. So that answers your question. until I get this, I'm not going to look for shorts because there's just no risk reward available to me. If you're looking at taking on risk, what are you shorting? You're shorting, excuse me, over expansion. You're shorting extension with no valid structure. You know, okay, what could we look at that pins our shorts in? With plus 75% on the ATR. We're trading into the exponential moving average. That was the worst line ever. We're trading into the exponential moving average. Could we fail over? Yes. So there's two probable reasons to get short, but there's no confirmations to get short. And that's the key. You have to wait realistically. If you're small, retail, intraday, and you've not got enough size and you don't really know where to stop place, you need to wait for confirmations in the market to actually get short. Because same scenario here. So let's take out that move from last week. Okay, where are we? We're not at the 25. We're not at the 75 where we currently are. We're below the moving average. We've just broke out from structural levels, but we're retracing. Had you have thought that it was still safe havens in play, you'd want to get short here. So you'd be like, oh, okay, yeah, right. I've got this. I don't know. I'll put my stop here. I'm going to be targeting lowers because, as you can see, we've got lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And we continue to trade on. And then we've broken this level. So now we've got a lower low. We've come back in. We've got this. So, okay, let's get short. That's the same theory of what we've just brought on here, except you've got the confluence of overextension on the 75. This one's still trading in the daily open, so we've still got opportunity to trade into the upside. So the risk reward on this is worse than the opportunity at the moment, but it's still a discussionable topic. So look, okay, we think this is going to go short. All right, you know, we're triggered in. Yes, we're trading. Oh, market's traded higher. I'm out. Shit. So shorting just because it looks like it's getting weaker isn't a strategy, isn't an edge. Too much decay in that. You're not going to be successful in that. You need to be looking realistically at confluences, confirmations, where the overall momentum is, where the overall trend and order flow is. And I did that because I was going to say order flow, but where's momentum at this moment in time? If we're looking at, you know, anything from daily. All right, daily. So daily took at that structural high. We pulled into this leg. We pulled into this last area of demand. We've now traded from that level into this. Where are we potentially trading into? We're potentially trading into this. So we do have downside, right? We do have downside to play with, but this move here expanded to the upside. So unless we start to get confirmation on the lower time frame to get short, you don't want to be shorting. You know, it failed to break the low of that previous candle at 116.18 freeze. We traded up above that. We traded and closed above the previous Thursday candle as well, Wednesday candle. So wait 1 second. I think that's Thursday. Sorry. That's your Thursday. That's your Friday. This is your Monday. Correct. So we're trading up here at the moment. So we're trying to find. This move is very corrective. So we are trying now to find the level to get short from. Could it be at 117s? Maybe. Could it be higher? Wow. Could it actually be back up in 119s? But we are trading in a very corrective PA range. You know, okay, that was the high. So we are bullish still because we failed to take out this low. Momentum on the intras is bearish here. We switched to bullish. We've now gone on the daily bearish unconfirmed on this leg. So I'll explain, right? So we failed to take out this high. So we've respected something over here. we've taken out this. So on the lower time frame, you'll see a move like this, right? Because you can see that wick's in place. So the lower time frame we get, there's a short in there, right? There's 100% a short in there. But we've taken out this. We now need to find something in this leg. So ideally in this area, from the equilibrium into the maximal or to the kind of higher areas of this move. Depends on if you want to get too technical. So we need to see a pullback into that. Once we get confirmation of a short, yeah, we can get short. That isn't an issue. But I wouldn't be shorting just because I feel like shorting up here. There's nothing there for me. And it can pay off. And I'm not saying you're wrong. And I'm not saying I'm right. That is the beauty of a market. You can be right with your analysis and get it wrong. You can be wrong with your analysis and still make money. And that is the only thing we care about, making money. But let's be real. Before you make money, you need an edge. And before you have an edge, you need to always make sure that capital protection is the only thing you care about, because that is the only thing that will keep you in the game. The longer you stay in the game, the more you protect your capital. Hopefully, in time, the more experienced you become, the more money you grow under management. And then from there, it's not about how much return you make, it's about how much size you have, because you don't need to make as much. But for me right now, I'd be looking at seeing where the market develops out in euro dollar. I would not be shorting this. I'd be waiting to see what happens, because the M5, whilst it's fractal, it doesn't hold a greater weighting in comparison to the 4-hour or the daily. And this expansion to the upside suggests to me we're looking for something in this leg to get short. We just need to wait for it to develop out. So it could be this level, right? It could be this. But we haven't got the confirmation on the lower time frame to get short. It's failed to take out the low. So until it takes out the low and starts to give confirmation that supply is now in control, I wouldn't be shorting. Dollar Swiss. I don't think I've got that in my tickers. Give me a sec. New. Let's look for it. Oh, my hands warmed up. I don't know what data feed you want, so let's just look at FXCM. So this follows on from Euro quite comfortably. So what have we been talking about the entire stream and the entire last week's stream? Initially, we were looking at potential longs in the dollar with a risk off theme. That's liquidity sweep and should go up. Excellent educational advice and guidance. So this follows the theme quite nicely. That we're looking at dollar weakness. So we saw Euro rally, we saw Bitcoin rally, we saw stocks rally, we saw the Euro rally, we saw Sterling rally, we saw everything rally, right? But this follows that overall theme that we're now looking at weaker dollar. So let's just look from the left. Weak. We've respected. This is really range bound. Like, look. This has been holding the whole time. This has been holding since September 2025. So this is the range we're trading in. So there's three areas to there's three areas to trade from in a range. And I'll expand this. The three areas to trade from are here, here, which are the highest probabilities, and then here. So they're the three areas to trade from. This area is subpar, low probabilities. These are the higher probability areas to trade from, because we're trading from the extremes of a range, whereas here not there, but in the middle, you're trading from the middle. And as a range trader, you never want to diddle in the middle. You want to be trading ideally from the extremes of the range to keep probability in your favor. But overall, we're bearish, but we're bearish range. So now this is some form of distribution or accumulation. Depends on if we see this now expanding and trading to the upside, or whether we just see this range being kind of put into play from a distribution perspective, and then we see continuation to the downside because we continue to see a weaker dollar. Okay. Now, you always need to be looking. You always need to be looking at the bond market, because we need to be looking at certain bonds, certain yields to understand where the market's going. If yields are going lower, then that means realistically the stocks and risk will go higher. And if yields are going higher, it means that we're going to be seeing moves higher in the dollar, in the yen, in the Swiss, and obviously the cash transition. So we'll be seeing money go from stocks, money flow out from stocks, money flow out from Bitcoin, and it'll be flowing into fixed income or gold, because they'll be looking at safer haven plays. Because if the risk-free rate increases, i.e. yields, if yields increase, which is the risk-free rate, and let's say an S&P ETF only gives you 9 or 10% a year, factoring in inflation at 3-4%, plus the risk-free rate, which is, let's say, so a couple of years ago we saw 6-7%. 6-7. That's really bad of me. I shouldn't have done that. My children do not stop doing 6-7. So it gets in your head. So if yields go up and it's 6 to 7% on the base rate, that's your risk-free rate. So if you put your money and park your money in there, you're going to get 6 to 7% risk-free. So if there's 2 to 3% on top of the risk-free rate, some people may not want to risk it. But if rates go down and their risk-free rate is 1 or 2%, yeah, I know. I am a parent, Saucy. I've got young children that do that. If your risk-free rate is 1 or 2%, that's where you'll start to see the narrative shift back into stocks, back into Bitcoin, because they're not going to, if you look at inflation, they're not going to get the return they require on top. So overall for me, dollar at the moment is in a range. Overall tonality is bearish. I want to see trades into the extreme with confirmation on the lower time frame to get long. Or if we trade into the extreme of resistance on the higher side, again, looking for confirmations to get short. I won't be looking for trades in the middle. So even though I said there are free trades, there's actually more, but inside the range, there's free trades. There's only really 2. I don't like trading in the middle. The only time you'll trade in the middle is if you're long from the extreme at the lows, or you're short from the extreme at the highs, and you're looking to scale in. But the other trades are cash, sitting on your hands, keeping your cash, your firepower, your gunpowder dry, waiting for the market to show its hands, and then looking for a better opportunity once we get a breakout and confirmation that we are trading long or we're trading short. So there is a fourth trade, which is staying in cash and waiting for the market to show its hands. But there are, again, a couple of trades inside that range if you're getting itchy fingers. So let's just quickly go down to the M5 and let's look. You know, crappy demand comes into here. We don't get that instant sell-off. We get trade down, retest, 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 trades down into this area of the point of control. We retest, retest into extreme. And it clearly suggests right now that there wasn't enough buyers stepping into the market in and around this level to take it higher. So the shorts that had been accumulated and built up during this area obviously had the power to take it down inside that range of continuations to the downside. Bitcoin. Let's go back to Bitcoin if you want to look at a Bitcoin swing. Sorry. My apologies. So, oh, I could do that a bit cleaner, but so this is the scenario. If you want to swing, then in theory, you're looking for longs now, based on overall market cycles, right? If risk is really in play, then we're in longs. Bearing in mind the strategic Bitcoin reserves got the floor in as well, so there's potentially that taken into consideration. I mean, I don't like this PA. Really don't like it. So I'd want to see loosening up. So I'd like to see this. That's what I'd like to see. But if you're not interested in getting a better execution, then you should already be long from Friday when I mentioned getting in long. And I think it was a chap called Ryan that put the comment in about the support in and around that area, which we were talking about, and we broke down. So if we go down to the 4 hour, yeah, there's ideas, but like I just don't. It's so messy. Like the PA, ignore the volume, ignore the ATR, ignore the horizontal levels. We've had that move down into this area of demand. We've reacted, but not very good. We've traded down again. We've corrected. We've then traded above, and we've then reversed it immediately. So very much a V reversal. So this to me suggests we do want lower somewhere. You know, it could be this range. Don't know. And then we start to build that base again, because people will want to get long Bitcoin as soon as it starts trading lower without any confluence or confirmation that you should be getting long. They'll just hit it. And if you're looking at longer term projections, 125s, 150s again, like 125s again, 150s, 175s, however you want to see it, it's not for me to call it. I do hold Bitcoin. I still am in Bitcoin. I'm still long Bitcoin. So, you know, I know where I want it to go, but it's not for me to tell you where it's going to go in terms of me being biased. So, you know, realistically, you want to be looking for the confirmations. Right now, I don't see a confirmation in here to get long. If you're just buying support, then you're buying now on the M30. You know, we're seeing the reaction on the M15. We're seeing M5 start to show some reaction as well, because obviously from the extreme here. But this is realistically, if I was to look at the M5, I'd have to see this level go, then to come back in and hold something. And then I'd want to see structure break or some form of structure break with some form of liquidity to get long. At the moment, I wouldn't be stepping in front of a freight train. Just to get long, I'd rather sacrifice, like I said, I'd rather sacrifice a small percentage of the move to get in. At better levels. Yes, I sacrifice some P&L, but it doesn't bother me. But yeah, overall, swing wise on the higher time frames, you know, this suggests that on the daily, we're going to be looking at, even though there's that a 94 level that's holding, if we can break above that 94 level, then 100 is back in. if we actually hold this whole range, then obviously we can be looking at higher prices. But this range looks horrible to me. This range looks like we want to trade down into 80s. But that strategic floor could say no. So the weekly is really the only bearing that we can get at this moment in time because it's not fully developed. So, you know, if we look at that move, and then go from here, actually we'll just tone it down a bit. We'll be a bit more conservative. So on this swing, 133,000 is the potential target on the projections from here. So let's just put a time tag on it. 26. So that's when we've called 133,000. In terms of time, 203 days. So potentially no, that's not going to happen. So what's that? 8th of June. So if we have the same volatility and same forecast and projections as March to October, then there is the opportunity that we could see BTC at about 133,000 by June. If markets want that. But let's look at, so let's look at $161 days to do that. 203 days. I mean, this was a long move. Year and a bit. Blimmin' heck. Nearly 3 years. So this is interesting. So this goes to show you that swings can break, right? So this is lovely. So we've had that trade above the high. We tried to trade above it. You'd still have seen people trying to get long inside here. So they would have been looking at longs in this. But it all depends on how it breaks. And as you can see, let's actually get the circular tool. As you can see, it only broke with a wicks. So on a lower time frame, that's a break. But on the weekly, that's not a break. Not the best of breaks anyway. We've got very, very, very slight breaks on the bodies. But overall, very wicky. So we came back in, and you would have seen people getting in long here. So the projection then would have been, oh, okay, so, it's taken 161 days to do that. All right, so let's look another 161 days out. Yeah, it should be like that. And it should be trading from here to when we were initially getting long, which is here. It should be trading at 72,000, above that 69,000 in the same period of time. But what actually happened, we traded below into more of the extremes of the legs, back into pretty much this whole area. We can clean it up how we wish to in a minute, but we traded back into this area because overall this move was the last structural point that took out this. This became weak because it failed to take out this high. So we wanted to get that taken. So like this. And okay, you could have got long from inside it because it's 20 grand. We've seen 65 on the ticker. But for me, again, similar scenario, I'd want to start seeing this taken out. I'd want to see some form of demands being respected. And then I'd look to get long. Okay, I would have missed out on 10 grand in a move. And that's okay, because we're trading for the long term. We're not necessarily trading just to make the money overnight. So I don't mind moving and losing some percentage gains. Of course, that move that move then became the big move from 30,000, give or take, to the 125,000, which was 400%. So that's actually crazy. 749 days. Good to say nothing is really there on the market for now. We'll stay out till tomorrow. Yeah, I think we need to see it develop. I think that's going to be the way. Last week was such an expansive move. Last week we had huge expansions to the upside. So I believe that we're going to see some form of correction at the beginning of this week before we start to continue out and actually develop whether we continue bearish depending on the instrument or bullish. Are there any other questions at all? If not, we're over time, pretty much done for today's session. This week, we're going to be doing some giveaways. So please tune in. We'll be doing some giveaways across the week. So please tune in for those. If you're not already, like, subscribe, and turn notifications on from whatever channel you're viewing this on. And I look forward to seeing you tomorrow, same time, 8 a.m. GMT to 9 a.m. GMT. If you have any questions, feel free to reach out to the support team and they'll send them across to me so that I've got them ready to answer tomorrow. Alternatively, when you join, please add your questions into the chat and I'll answer them throughout the stream. But have a wicked trading day. Enjoy your week. And I'll look forward to seeing you same time tomorrow.
Emerging psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest